First of all, I think that COVID pushed out a correction in venture that probably would have taken place if we'd been business as usual. And I think it's still a couple of years in the future because while COVID has been raging, and my voice is like this because I'm recovering from COVID myself right now, so I've definitely felt the effects personally. I think that correction is still out there a couple of years, but while COVID's been going on, there's been such a huge amount of capital in the limited partner side of our ecosystem that has an increasing appetite driven by the high 10-year returns of venture and private equity as well, to put more and more capital at work there, which has made the amount of capital raised has driven it to all-time highs, which of course is forcing more and more deals and larger deals to be done with more competition, leading to, as I said in my presentation, PitchBook published the median early stage valuation for a venture company hit $140 million.
Now, mostly, I think I will just speak on behalf of the Silicon Valley environment. Yeah, I mean, it's devastating with the negative impact in people's lives with the COVID-19. But on the other hand, I'm trying to get people to focus on some of the positive things as a result of the COVID-19 pandemic is that the remote work from home, as I mentioned in my talk.
So I think the COVID impact has been in stages. As I mentioned even in my talk, the first impact, the quickest impact happened in the second half of 2020 or first half, second half, right after COVID, where investors could not meet entrepreneurs. They defaulted to giving more money to their existing portfolio companies. These companies that had raised money in December 2019, they raised another round in April 2020, even though they did not need the money. Because the venture industry works with a certain capital call schedule, they have to deploy a certain amount of money every year. And in 2020, at least the first part of it, they ended up deploying more of it in the portfolio companies and less in new investments.
Yeah, I think there's been pretty much a spike in new ventures because of the new environment. Again, from the new work environment, the new home environment, so many things have changed. Again, if you look at our lifestyles, they've changed radically in the last 2 years. And I'm sure there's a lot of very, very smart people that have come up with new ways of dealing with this. So I'm sure there's a lot of innovative companies out there that have kind of filling a lot of the gaps that we're experiencing in our daily lives. And I think obviously some of these changes are going to stay with us for a very long time. Clearly, the work at home environment is going to be radically changed. I think I remember a few years ago when Melissa Myers was running Yahoo, she said that everybody's going to be working at Yahoo. Nobody will be working from home because it's not productive. Well, I think she's been proven incorrect because pretty much almost all the big Silicon Valley companies